Today, we're going to go through a bit of a deep dive as to what the markets are doing, the earnings season, the key levels on key charts, and understanding the future momentum going forward for the stock market and for crypto, as well as Forex. We're going to be covering off a lot of ground. It's going to be a lot of fun, and I'll give you some insights into what happened in the last halving for the price action to come next. Let's run the numbers. When looking at the futures, we can see the S&P 500 is still under negative price momentum, but that's not quite the case with the Russell 2000. We can see it's starting to recover, as is the Dow. So just something to be aware of. The NASDAQ is under negative price momentum at the current time. The Nikkei is coming into a degree of structural resistance, just at least on a short-term basis, and the ASX is also coming into it, but they're looking reasonably healthy. We could be seeing a little bit of a turnaround here, but just always remember, prices always move in waves. If we're going up, we're not going up just in a straight line. We're going up in a wave-based function. It's earnings season inside the stock market. Will strong earnings give the S&P 500 and the other indices a much-needed injection of liquidity? The message on the street is this earnings season will reinvigorate the S&P 500. Well, you look at that, there's a record 63% of respondents expecting financial results to support stock prices. That's a higher level than we've seen in quite a while. Looking towards the main markets, we've seen recently that the VIX has been surging upwards. It's just pulled back recently, and that's flattened out the NASDAQ. We've also seen that Bitcoin has been rallying, even though it got pretty much hit by the VIX going up. As it's just starting to consolidate, the VIX is starting to consolidate and to come down. We've seen renewed optimism inside the crypto market. We can also see that oil is under negative price momentum. Yields are going all over the place at the current time, but there is US dollar or DXY strength, and gold has recently sold off. Keeping your eye on the S&P 500, the key structural level that you need to look at is just slightly above 50.40. We have a key structural support level at 49.35, and we can see that we've not been able to hold on to that 50.40 level. Knowing where your structure is, especially in times of market turbulence, is incredibly important. Also knowing how strong those levels are is even more so. Inside the stock market, people are feeling a lot of fear. 1 week ago, the fear was 39. Now the fear is 31. As the number goes down here into extreme fear, that presents incredible buying opportunities. But unfortunately, there's just about no one that will be there because people tend to buy when there's greed, or especially when there's extreme greed. With earnings season coming up, big tech is in the hot seat to deliver on AI promises, Bank of America says. The main markets have been so fearful because we've seen the largest stretch of weekly declines since December of 2022. Looking at the NASDAQ, we can see the NASDAQ failed to hold this 15,670 level of structural support. It turned to resistance. If it's not going above, it's going below, next to the next level of structural support. This is why it's really important to know where the structural support and structural resistance levels are. Also, the gaps between structural levels are very important to understand. If you've got negative price momentum and you can't get above a structural level and you've got a negative fresh air gap below, it's likely to come down really hard. And a lot of people will get thrown off by that. But not you, because you know where the structural levels are. And at 15,173, we can see another structural support level playing out. It is really clear that the NASDAQ wants to go higher, but the sellers are pushing it down at the current time. If the sellers get their way, they'll push it down to this 15,340 mark. But if it finds support there and starts to go back and challenge the 15,670 mark, that will get a lot of shorts by surprise because they'll feel, hey, it's so negative, it just needs to keep on coming down and down and down and never up. That's not the case. It's always important to understand that the stock market is driven primarily by earnings. If companies are making money, expect the stock market to go higher. If they're not making money or they're making less money, expect it to go down. The word on the street is the profit levels for the Magnificent Seven are starting to come down. That's not such a good thing because that will adversely hit and impact the NASDAQ. And you've seen the NASDAQ has been particularly weak. So what does this mean to us? It basically means that the smaller caps, and we've seen the Russell 2000 do particularly well. It's bearing out this specific chart in mind. That's why I showed you those charts right up front. Turning towards Nvidia's levels, we can see Nvidia got caught by so many structural safety nets. That was very good for Nvidia stockholders and shareholders. Now what we've seen, this 784.50 mark is really important for Nvidia to get above. If the NASDAQ becomes reinvigorated, we could see Nvidia putting in one of these fantastic candles upwards, up to 880. But what if it goes the other way? What if Nvidia disappoints and it goes down? What's the next level below that? Let's check out what that lower level is. We can see it playing in around that 726 area. When we look at the inverted VIX versus Bitcoin and the S&P 500, we can see that the markets are still under a degree of negative price momentum. Bitcoin may well be turning the corner right at the moment, and it's probably saying to the stock market, hey guys, where are you going? Follow me. A lot of people misunderstand the largest market in the world, which is the bond market. And many thanks to Edwin for sharing this. In 2022, the global bond market totaled $133 trillion. And it's only going to get bigger with all the money printing that's going on. Economic systems run on debt. The bond market globally is very big. That's why you need to keep your eye on junk bonds. Junk bonds are the riskiest of all bonds. If junk bonds start to decay down, you'll see intense negative price momentum inside the markets. That's why we need to know the structural support levels that can capture price. If a structural support level fails, there will be levels underneath it. But just always bear in mind that structural levels have gravity. They get attracted back to it. Here we can see that junk bonds, instead of decaying down, just coming up, hitting it, just moving in a wave down. It hasn't done that at all. It's gotten above. This is a very good sign for the stock market and may well indicate that risk is on. Bitcoin particularly takes notice of what junk bonds is telling it. When junk bonds talks, the markets listen, and we can see that inside semiconductors, Nvidia has done really well. Amazon is coming up. Alibaba is putting in a good show. Google is up. Microsoft is up. The financial system is up. Pretty much everything is up except poor old Tesla and gold just getting hammered. In the last trading session, you may remember that IT, information technology, did the worst. In this session, this previous session, it did the best. Woohoo! If you've been reading the news recently, you would have seen that Tesla is just getting rid of people right, left, and center, at least 10% of their workforce, even more than that. 4 of the Magnificent Seven are facing their earnings test in this week, and Tesla is looking pretty unhealthy. That's exactly why Elon is saying to staff, it's time for you to go, so that my profits may shine. Of course, this doesn't just happen to companies like Tesla. Whenever you see a company laying off their employees, it means they're under negative earnings potential. So just bear that in mind. Ken, how can you say that? Tesla's sales have been skyrocketing. Well, they were at one stage, but they've been sliding ever since. Literally Q2 of 2021. Elon is set to cut more than 14,000 jobs, or equivalent to 10% of the global headcount, but the actual number of people may exceed 20,000. Elon Musk has always said that Tesla's brand is a word-of-mouth brand, so he's in effect cutting his marketing team as well. That newly formed marketing team was only formed 12 months ago. Well, less than a year ago, actually. We've seen this many times with Tesla. In the darkest hours, people feel that Tesla's just going to go down and down, to head towards zero, just like Bitcoin. But we need to look at structure. What is the objective dynamic market structure telling us? Let's pop on the indicator. Is the indicator confirming what people would think? No, it's actually not, and it explains a lot of what is happening with Tesla's price at the moment. We can see that around the 174 area, there's a very large level of once structural support, but it turned into structural resistance. That structural support failed, and then the structural resistance came in and started pushing things down to lower structural levels. Fortunately for Tesla, it's got an incoming structural support level at that 139.50 mark. This would favor a bit of a relief rally inside Tesla, which could catch a lot of people off guard. BlackRock is expecting 2 Fed rate cuts for this year. When we look at the probabilities of a rate easing or a rate cut coming up to the next FOMC meeting, which is not too far away, one day ago it was 5.4% and now it's 3.4%. It's gone down. Keeping your eyes on the Forex pairs is incredibly important. It can tell you what can happen inside the main markets. We're seeing that the inverted pairs to the US dollar are starting to put in a somewhat of a base and starting to retrace. You can see that the Aussie dollar is a really good one to look at because it has some degree of predictive power when it comes to looking at Bitcoin's price. Actually, the euro dollar is not too bad, but the Aussie dollar is better. Sorry, Europe. What about the Kiwi? The Kiwi is not bad either. One of the things that you've got to be aware of as the DXY strengthens, that tends on average to put negative price momentum inside the crypto market and also the stock market, because you remember back to that very initial chart that I showed you. When the stock market was coming down, what was Bitcoin doing and crypto? It was doing the same thing. That's why it's critical to keep all of the markets in mind. The DXY has been showing a lot of strength, and that strength is rattling other global markets. Bullish dollar bets have surged to their highest levels since 2019. Looking at the DXY, we need to understand, where is the DXY going to next? There's a very simple rule inside financial markets. Price waves move between structural levels. That's it. If you know where the structural levels are, you can assess the probabilities and scope and direction for movements. So let's pop on the indicator. The DXY is at a really interesting level, at least on a short-term basis. It should be coming into a level of retail support so that the retail mob could just come in and seek to push the DXY up. But however, when we look from a structural perspective, we can see actually a kind of a different story. The DXY is underneath structural resistance. It's got a negative fresh air gap down to this 105.61 level. So that could be really problematic for the DXY and fantastic for the markets if it comes down. Please let me know in the comments, where do you think the DXY may be heading to next? Unfortunately, there's a lot of conflict in the Middle East right now, and the Middle East is very, very big on oil production. Unfortunately, there's a lot of conflict globally, and it's getting highly concentrated in the Middle East at the current time. The Middle East is very resource rich, especially in terms of oil. So let's have a look at oil. When Iran launched its missiles at Israel, we had an initial spike in US oil, but we can see that oil's since retraced to under this 82.50 mark. But just be aware, if hostilities continue and we start to get positive momentum on oil, it could very quickly come up to $86, and that's going to catch a lot of people by surprise. Gold has been coming down because there's a limited risk of war, or so the newspapers say. Let's hope that's the case, but gold is not just about turbulence in war, it's also about yields. When the Middle East conflict broke out, gold did a big surge and Peter Schiff was heard cheering all around the world, but since then it's basically lost a lot of its luster. Now we need to check out the structural levels to see where we're supported and where we're encountering resistance. Also, the point to realize is that gold is reactive to real yields as well. Currently, gold is under a lot of negative momentum. It's below that structural level of 23.43. That's the next one you want to keep your eye on. We're at and have been captured by structural support at the 23.25 mark. If the DXY and yields start to weaken and conflict breaks out again in the Middle East, expect a movement up towards that 24.40 mark. But if the DXY stays strong, expect a collapse down and the yields also go up and tensions go off boiling point in the Middle East. Expect gold to fall. And if gold comes down, it's going to pull its little brother silver down with it, so just be aware of that. A really good question to ask: what do you think is a better safe haven, gold or something like crypto, something like Bitcoin? Please let me know your comments. The halving is officially over and the meme coin mania sent Bitcoin fees soaring during the halving, and that it did. The miners were quite happy with that. They pocketed $109 million. The halving marks the official start of the Bitcoin bull run, which takes all of crypto with it. But the understanding behind the halving is that the halving reduces the number of Bitcoin rewards in circulation, and it's set to cost the miners $10 billion of revenue per year. This increased scarcity puts more value into Bitcoin, and because it's deflationary in nature. A lot of people just rely on luck. When it comes to financial markets, there is no luck. It's all preparation, knowledge, and self-control. If you're using gambling as a strategy to get rich, perhaps rethink that strategy because it's a really bad one. There are indeed fortunes to be made from crypto, no question about it, but please do your research. In the past 24 hours, the global crypto market cap has come up to 2.39 trillion. That's a 0.007, just kidding, 0.07% increase. One thing to just bear in mind: if you're in crypto and you've missed the first part of this video, you're going to execute your profitability in a negative direction. You really need all the information that I've shared up front. That's why I don't put in timestamps. We can see for the top cryptos, Bitcoin in the past 24 hours has been coming up, Ethereum less so, BNB coming up a little bit more, Solana bit of a standout, and XRP not doing too badly, and Doge just moderately up. For the greatest gainers in the past 24 hours, Pepe is number one, followed by Pendle, SEI, Tao, or BitSensor, IMX, good to see Immutable X back on the deck, Stacks Core, and CAS, or Casper. The greatest losers, there haven't been that many. The entire crypto market has been doing really quite well. When we look at spot Bitcoin ETFs throughout the days, we can see the different spot Bitcoin ETFs and the total. This is what you want to be looking at, just the total. We can see that we've had a lot of outflows recently and we're starting to get inflows. That's a positive upward price momentum or pressure on Bitcoin. It's a little bit easier to see in this particular chart the total Bitcoin spot ETF net inflow in US dollars. You can see that as we're getting outflows, what's happening to Bitcoin's price, and as we get inflows, what's happening? Outflows and inflows are really good to look at, especially if you've got a lot of outflows. They're going to pull the price of Bitcoin down. Bitcoin has been doing some pretty interesting things recently. It's making its way up, but the volumes are very light. Where could Bitcoin be going to next? To answer that question, we really need to know where are the structural levels. Let's pop on the indicator to find out. With an understanding of structural levels, you'll see charts in a completely different light. A lot of people believe in fundamental analysis, and why not? Fundamental analysis is good, but fundamental analysis, such as stocks reporting each quarter, well, what happens after they report? Well, you would look to the news then. but what does the news really tell you? You need to look at the charts. The charts are price reality. If you know where the structural resistance levels are and structural support levels are, you'll be ahead of 95% of people. But of course, like everything, success is always optional. We can see Bitcoin currently trading at 66,978. If it manages to get above that 67,400, it's got a fairly good positive fresh air gap up around that 68,700 mark. Now, what happens if we start to trend below and start to lose all of this structural, potentially support, but it's a little early to tell. And we've had a couple of failures here, so it's not looking that crash hot. If we actually go below and start to come down, we would expect to get caught around that 65,200 mark at the first point. The indicators will show you lower levels, and they're available at CTKSMethod.org. I'd like to give you a bit of a bonus. If we look back to 2020, we saw the halving come in. We had 7 days of positive price momentum and we went up nearly 22%. And then in the next 7 days, we came down around 13%. People would be getting really confident around here and going all in and more, only to probably be shaken out of the trade down here. You can always buy lower. Remember, price is always moving in a wave. Even if it's going up, it does come down. Currently, like the last halving, we're seeing a bit of positive price momentum, negative price momentum entering the halving, and now positive price momentum. If it follows the last cycle, we may have more positive price momentum and then a retrace. If we go back one more halving, we saw negative price momentum going into the halving, and then 8 days, not 7 days, but 8 days of positive price appreciation, coming up 9.3%. And then we had a doozy. We came down 32% in little over 2 weeks. Please don't get suckered in by narratives. Just look at price action, look at structural support and structural resistance levels. Dedication is the confluence between determination, confidence, and persistence and commitment. And our global family has dedication like I've never seen before. You're just amazing people. One thing that we do with Positive Excellence, we put money and success in last place, because if you do the right fundamentals, you're going to get there anyway. Don't be in a hurry. One of those fundamental building blocks is definitely health. If you don't have your health, you have a lot of problems. So if anybody is going through any health issues at the moment, please know that our love and healing thoughts are with you. And John, wishing you all the best for your trip to hospital. Focusing on your health and healing is vitally important. If you have any tips or tricks on how to increase health, such as sleeping better, such as getting more balance into your life, please let me know in the comments. You could make a huge difference in another person's life. And always remember that life pullbacks simply give you the strength for the next life rally. If you're finding yourself getting 2 steps backwards, you're going to go 4 steps forwards in time. Just keep your dedication and commitment up. We always know in life we either win or learn, and we don't blame. If we blame, we disempower ourselves. We make somebody stronger than us. And we simply don't do that. We make our knowledge stronger than the problem instead. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.